Western economies remain deeply over-financialized and have been rigged to focus almost solely upon asset prices rather than the generation of real productive activity. Together, governments and central banks have overseen the financialization of housing since the post-World War II period. More recently, politicians have raised the prospect of generational mortgages of even 50-year terms. This video considers what this tells us about the future, both for house prices and fertility at large. Asset price inflation is of course the principal factor that restricts people from having children, and in particular the most powerful fertility depressant in modern society is the cost of housing. Numerous economic papers confirm this, such as a 2024 paper by Chinese economists titled "The Effect of House Prices on Fertility." This paper used a quasi-experimental design in China to estimate the causal effect of house price increases on fertility. In cities where house prices experienced an abnormal jump, 12.4% on average, after a policy shock, the birth rate fell by 1.68 per thousand compared to the control cities. They found the effect was statistically significant. While a University of Bristol paper, which was titled "Do High Prices Deter Fertility?" and considered evidence from England and Wales, found a 10% increase in average house price in a month was associated with somewhere between a 2 and 4% drop in fertility among renters over the coming 2 or 3 years. Now, while of course there are many factors, it is the biggest deterrent to family formation. Thus, 50-year mortgages symbolise a deep civilisational shift in time horizons. But in highly financialized economies, there's a perpetual need for credit expansion. This supports asset prices and ensures sufficient liquidity for debt servicing, also known as interest costs. In addition, as mortgage-backed securities are reflected as high-quality liquid assets, it means that the housing becomes one of the primary collateral assets for the financial system. So if house prices were to collapse, banks, pensions, whole tax bases, and even any remaining vestiges of political legitimacy would disappear. The empirical evidence is quite clear. The strongest prediction of delayed childbirth is unaffordable housing. Unproductive credit has been deliberately driven towards supporting house price growth. Meanwhile, real productive economic output and consequently wages have lagged house prices. Thus, household formation has shifted from the 20s into the 30s and even beyond, representing a dramatic compression of family formation to just a narrow period. Furthermore, high property prices and the commensurate taxation upon them and the purchasing process acts as a further impediment to labour market mobility, meaning that many are then forced towards prioritisation of employment stability versus pursuing a family. Then there's the opportunity cost as children become prohibitively expensive, not just from the perspective of needing a bigger vehicle or rising childcare costs, but because the base cost of existence, whether it's a rent or mortgage, absorbs the majority of disposable income. Psychologically, asset price inflation creates a precarity mindset, where if housing is unobtainable or unaffordable, the future feels unattainable as well. So in reality, the 50-year mortgage ultimately helps to sustain the unsustainable. It ensures larger nominal loans despite stagnant wages. It maintains house prices at politically necessary levels. It acts as an effective bailout of the banking system, and given that the collateral that largely underwrites the entire financial system is largely composed of government debt and mortgage debt, it helps to preserve the financial system, which of course helps in turn to avoid deleveraging, which could potentially destabilize the entire debt-based Ponzi system. Now, previously I broke down 10 different impacts of 50-year mortgages here in this tweet or post if you prefer, but the crucial point I really wish to make is just how destabilizing perpetual financialization is for the survival of humankind. Favourable demographics would create demand, but when birth rates collapse, as they are now, demand disappears, and the system needs a substitute, and that substitute is debt expansion. This creates artificial demographic demand to prevent asset price deflation. But instead, the inflation of asset prices via credit expansion prolongs high levels of indebtedness beyond reproductive years. It forces life cycle prioritization, where people then have to prioritize debt servicing costs, which demand more working hours. In turn, this feeds more ambition to actually work the career ladder and to seek incremental pay increases. The upshot is that many become increasingly time poor. And this isn't helpful to family formation either. It's not home ownership, it's therefore lifetime financial servitude to the financial sector. Gradually, this will end up normalizing time horizons, which will end up going beyond human lives. Thus, a 50-year mortgage becomes a mortgaging of the future, which is not going to be regenerated biologically. There's a combined mechanism here of how debt and assets inflation almost guarantee demographic decline. It's a self-reinforcing loop. High debt pushes policymakers towards further asset price inflation because when government debt is large, rising interest rates are dangerous for an over-leveraged economy. These high asset prices in turn mean lower fertility, as we've discussed. And this ensures a declining future taxpayer base, which increases government debt, and this creates more need for asset price inflation, which worsens affordability, and this drives fertility lower. This carefully constructed demographic trap also means that real economic productivity is undermined, while states respond with more debt-financed stimulus, reinforcing asset prices and crushing fertility once again. It's not a new pattern though, it's one that's actually repeated since the time of late Rome. The difference this time is that this time it could well be final. Now, from a civilizational perspective, 50-year mortgages and collapsing fertility are not separate trends, as they follow the same civilizational logic that prioritizes asset price preservation over generational renewal. It makes sacred the principle of capital while devaluing family formation and treating the future as a place to dump unmeetable obligations rather than create new life. The key factor I believe to understand here is that asset price inflation is the strongest form of fertility suppressant because it structurally, financially and psychologically obstructs household formation. Thus, such financialization should be seen as a late-stage effort to keep the asset inflation cycle alive at the cost of the very future that mortgages were originally meant to build. So such long mortgages simply increase financial stability, but increasingly there's a growing number of people who are choosing non-traditional paths. Whether it's migration to low-cost regions or countries, whether it's van living or opting for land and self-building their own homes. It demonstrates that many are unwilling to mortgage their futures. The choices seem unconventional, but they reflect a deeper instinct, which is simply to reclaim time, space, and even possibility from a system that has increasingly sought to monetize all three. And fertility can only rise again if we make the cost of living more affordable. Now, I hope this has been an insightful video. Do check out the other videos on the channel. In particular, everyone needs to know about the single unified ledger architecture that is being built right now. Thanks so much, and I look forward to seeing you next time. Bye bye.